ESG investing, focusing on environmental, social, and governance factors, is growing rapidly as investors seek to align their money with their values. But is ESG investing truly worth it? Does it offer competitive returns while helping build a sustainable future? This guide explores the reality behind green portfolios, separating fact from hype. We'll cover what ESG investing means, its benefits, challenges, and how it performs compared to traditional investments. Understanding these aspects can help you decide whether incorporating ESG factors into your investment strategy fits your financial goals and personal values in 2025 and beyond. In this video, we will talk about: is ESG investing worth it? The truth about green portfolios. So make sure to watch the full video. 1. What is ESG investing? Understanding the basics. ESG investing considers a company's environmental impact, social responsibility, and governance practices alongside financial performance. It aims to support businesses that prioritize sustainability, ethical labor, and transparent management. This approach helps investors avoid companies that harm the planet or society. ESG strategies vary from excluding harmful industries to actively selecting leaders in sustainability. Understanding these basics is essential for anyone considering green portfolios. In 2025, ESG investing continues to evolve, with more funds and indices available, making it easier for investors to find options aligned with their values and financial goals. 2. Environmental criteria. Why green matters. The environmental aspect of ESG focuses on how companies manage their carbon footprint, waste, natural resource use, and climate change impact. Investors interested in green portfolios want to support firms that reduce pollution and invest in renewable energy. This is especially important as governments and consumers demand greater environmental responsibility. In 2025, environmental criteria are becoming more rigorous, with increased reporting standards and regulations influencing corporate behavior. Investing in companies with strong environmental practices can contribute to a more sustainable planet, while potentially reducing risks related to climate change. 3. Social factors. Beyond profits. Social factors assess how companies treat their employees, customers, and communities. This includes labor practices, diversity, human rights, and customer privacy. Companies with strong social policies tend to have better employee morale, fewer legal issues, and stronger customer loyalty. In 2025, investors increasingly consider social responsibility a core part of ESG, especially as social justice and equality movements influence public opinion. Socially responsible companies may offer long-term stability and reduce reputational risks, making them attractive choices for investors wanting to support positive societal impact alongside financial returns. 4. Governance. The role of ethical leadership. Governance evaluates a company's leadership, executive pay, shareholder rights, and transparency. Good governance practices help prevent fraud, corruption, and poor decision-making, leading to better financial health. Investors in ESG portfolios look for companies with diverse and independent boards, fair compensation policies, and accountability. In 2025, governance remains critical as scandals and regulatory scrutiny increase. Companies with strong governance structures often perform better over time, making governance a key factor in assessing the overall sustainability and risk profile of potential investments. 5. Financial performance. Does ESG investing pay off? One of the biggest questions is whether ESG investing delivers competitive financial returns. Studies show mixed but increasingly positive results, with many ESG funds performing on par or better than traditional funds. ESG factors can help identify companies with strong long-term prospects and lower risks related to environmental or social issues. In 2025, as ESG data quality improves and investor demand grows, many green portfolios show resilience during market volatility. However, returns vary widely, so careful research and diversification remain essential for ESG investors seeking both impact and profit. 6. ESG ratings and metrics. Decoding the data. ESG investing relies heavily on ratings and metrics provided by third-party agencies, but these can be inconsistent and complex. Different providers use varying methodologies, making it hard for investors to compare funds or companies. In 2025, improving transparency and standardization of ESG reporting is a major focus, but challenges remain. Understanding how ESG scores are calculated and what they measure is important for making informed investment choices. Investors should look beyond ratings, considering qualitative factors and direct company disclosures to evaluate true ESG performance. 7. Common challenges and criticisms of ESG investing. ESG investing faces criticism for greenwashing, when companies or funds exaggerate their sustainability efforts. Lack of standardized definitions and reporting makes it easier for misleading claims to spread. Additionally, some argue ESG investing limits diversification or may sacrifice returns. In 2025, investors must remain cautious, conducting thorough due diligence and avoiding funds that only pay lip service to ESG principles. Recognizing these challenges helps investors stay realistic about ESG investing's benefits and limits, ensuring they choose portfolios aligned with their values and financial needs. 8. How to build a green portfolio. Practical tips. Building an ESG portfolio starts with identifying your values and financial goals. Research ESG funds, ETFs, or individual stocks that align with your priorities. Consider diversifying across sectors and regions to reduce risk. Keep in mind that ESG investing isn't just about green companies, but also social justice and governance issues. In 2025, more tools and platforms make it easier to track and manage ESG portfolios, including impact reports and ratings. Regularly review your portfolio to ensure it continues to meet your evolving values and financial objectives. 9. ESG investing and market trends in 2025. ESG investing continues to gain momentum as investors, regulators, and companies prioritize sustainability. In 2025, trends include increased focus on climate change, social equity, and stronger corporate governance. Green bonds and sustainable infrastructure investments are expanding, alongside traditional equity funds. Market volatility and regulatory changes create both risks and opportunities for ESG investors. Staying updated on these trends helps investors anticipate changes and adapt their portfolios to maximize both impact and returns. 10. Is ESG investing right for you? Making the decision. Deciding whether to invest in ESG depends on your personal values, risk tolerance, and financial goals. ESG investing offers a way to support positive change without sacrificing potential returns, but it requires careful research and patience. Consider your investment horizon, preferred impact areas, and willingness to accept possible trade-offs. In 2025, ESG investing offers increasing options and tools to help investors customize their approach. Ultimately, the choice comes down to balancing financial priorities with a desire to contribute to a more sustainable and just world. What do you think of our video? Let me know in the comment section below. If you enjoyed this video, make sure to hit that like button. Also, subscribe to our channel before you go. Thank you for watching.